Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. Founded it over 20 years ago and back in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms such as our 21 SPY and ES mean reversion systems and our famous KISS systems, which have been awesome. We're close to finally launching the next major update on that. Again, when we do, I'll do a specific video just on that. But again, it's been about a week since I did a YouTube video for you guys. It was last Wednesday. Steve Nelson did the weekend newsletter analysis. So again, time for me to do another video here, and it is Monday, March 18th. Anyway, this is our backend recorder for our website newsletters or web browser newsletter. So I'm going to go ahead and get this started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, March 18th newsletter. Tonight's newsletter, as you can see, divided into 7 major sections. So we actually got quite a few charts to discuss. I was wanting to do a YouTube video on the weekend, just didn't get a chance. As you know, Steve Nelson did the video on the weekend. So I'm going to cover things with my style. As you know, we both have our own different styles. I tend to be more system focused, more analytical. Steve is more of a pure, trader's trader, very good at reading the tape, stuff like that. Again, we both have our strengths and weaknesses, and that's the benefit of Breakpoint Trades. You get both of our perspectives. Anyway, like I said, newsletters divided into 7 major sections, same general format as I always keep. We'll have the opening discussion like we're having now. We'll go over the major indexes in a top-down fashion. We're also going to look at some of the larger cap stocks, that are such huge weightings on the markets. And of course, we're going to look at some of the inverse ETFs since the market is starting to get a little bit loosey-goosey now. It's quite late in its trend. We're wondering if it still has one more pop higher. What I've noticed is that there's some very obvious coil patterns forming, and I'll show you on this S&P 60-minute and 195-minute charts when we get to there. All right. Short-term support on the S&P 500 is that 20-day moving average. Okay. We'll review some custom indicators, look at the VIX, look at the NYAD, we'll look at the bond market, we'll look at a few sectors, we'll look at US dollar, commodities, crypto, precious metals, and we'll follow up on some trade ideas. I did add a few new trade ideas, but honestly, guys, not a lot of stuff out there. Quite honestly, it's always the same stocks, right, which have been dominating the market. Again, this week, news-wise, as you know, the big ones are the FOMC on Wednesday, and we have the NVIDIA event, which started this evening. They really revealed their Blackwell B200 GPU. Again, there's going to be more news on it tomorrow. But so far, the initial reaction has been actually down. So NVIDIA is actually down a little bit after hours. So we'll see. And let's go ahead and get started here. Before we get to the general market newsletters, again, regarding the KISS systems, if you haven't done so, make sure to go to that area, set up on the favorites area. Remember, you got to click that box to receive alerts about your favorite instruments. You'll get automatic email notifications whenever one of your favorites, your designated favorites, takes a new trade, there's a new smart trailing stop, or when it exits. You obviously have to set favorites if you haven't done so by clicking those stars. So make sure to do that. We are going to have a major update hopefully soon on this. I know it kind of feels like the boy who cried wolf, as we've been talking about this forever. It's been taking a lot longer than we expected to get the next version of these KISS systems out, but very soon we'll be adding that premium section where we have some of the KISS systems on smaller time frames. They do more trades. They have 2 to 3 times the performance of the standard daily systems. We already have the weekly, we have the FAQ, and again, even the standard systems been doing very well. You can see here on my favorites page, Reacts today closed out. That's when it's red, that means the system closed out. It made 50.84%. Nice trade. System Let's see. Also, the NTNX up 61.6%. Really nice gains here on a lot of these favorites. Google went long today. I'm not in love with that new long at this point in this market, but we'll see what that does. And the other thing, I'm also, in addition to bringing the new premium section, I'm going to be adding a universal update that's going to improve the statistics on just the standard KISS systems on all these. Remember, the KISS system, we have the standard default setting run on about almost 800 stocks. Well, I found a new standard setting that 90% of the time gives better stats. So soon we're going to get an upgrade across the board here for everyone. Okay. Again, once we get everything, I'll do a separate video, email on it, may even do a Zoom meeting, invite you guys to it, and we'll talk about it. All right, let's go and move back to the general market analysis. So image number 3 below shows the index sector table, what transpired today. You can see we started off with a nice gap up in the market for the major indexes. They all ended up nicely, with the S&P closing up 0.6%, NASDAQ 0.8 to 1%. The Russell, though, actually started off weak, and it closed down about 0.6%. And as you know, the market basically topped out early in the morning, and it lost some of those gains by the close. Right now, futures are down in after hours, and we'll see if we have a little gap down tomorrow or not. As far as the 21 market sectors we follow, more sectors were up than down, but really no big movements here. Looks like the largest move today was in the communication services, up just over 2%, but it looks like every other move here was less than 1%. Currencies, US dollar up 0.2%. Crypto finally getting a nice pullback. As you know, it's had one hell of a run, got quite extended, so we're seeing nice profit taking there. But we've also seen a lot of the crypto mining stocks have been super weak for the last week. And even today, MSTR, which is kind of a proxy of Bitcoin, had a real big haircut. So that area finally coming down back to earth. As far as commodities here, mostly to the upside. Okay. DBC, the index, up 0.9%. Crude oil up almost 2%. Natural gas up 2.9%. Copper slightly up. DBA up once again. That's been on fire. Wheat's up nicely. Again, these commodities continue to rock, and that is not helping the Fed's inflation fight, is it? As far as precious metals, gold was up today. Silver slightly down, but the miners were down. Again, this area is quite extended. You know, if it wants to pull back here soon, wouldn't shock me. Again, we'll discuss that when we get to the charts below. And as far as the bond market, we continue to see the 10-year and 30-year inch up. Next, item number 4 shows the economic news calendar. Like I said, the big one this week, besides the NVIDIA, which is going on this evening, and of course tomorrow, we have the FOMC rate decision. We also have one of the Fed governors speaking later in the week. Well, let's go and jump to the charts. First chart below, item number 5 is the weekly chart of the 5 key major indexes. I like to start off with this because since we had that bottom in late October, when the indexes rallied off of these channel flag-like patterns, the price has simply been riding the 9-week EMA up. The 9-week EMA shows up in magenta here on the Dow, and it shows up in red on the other indexes, the S&P, the NASDAQ. So you can see we're just riding that 9-week EMA up. Okay, that's your first important major support on the larger time frame. Next, number 6, here's the daily view of the Dow. And the Dow is only 30 stocks. We don't show it that often or put too much emphasis on it, but we do show it. Dow's had a hell of a run too, and continues to hold this little channel-like pattern. Notice you could also have a coil developing here. So we'll see which way this breaks. On a break, the first obvious support is that 50-day moving average. Hadn't been tested in quite a long time. To me, that'd be a magnet on a quick break. And MACD, you know, we've had divergences in place. MACD's been recycling back to zero. That's where you can get another push higher, or that's where the divergence can finally kick in and you get a bigger sell-off. So we're nearing some inflection point here. Again, we haven't broken any support yet. RSI is still holding this little support area for now. Number 7, here's the weekly view of the S&P. Again, notice all these dojis here. First off, your 9-week EMA, that's your major support. That's a ways off. So the 9-week EMA is 50.41, where the S&P is 51.50. So approximately 110 points away. Anyway, you can see dojis the last couple weeks. Again, today is only Monday, but definitely market's running out a bit of steam here. Not surprising. We've had, again, one hell of a rally from that October lows. Number 8, here's the daily view of the S&P. Here, we had that trend line drawn back to the October low, but I didn't like it because you had too much white space here. So here I got it connecting, essentially 3 data points. But again, the important support here in the short term is that 20-day moving average. You can see we basically bounced off of it on Friday, up today, but off the highs. So the question is, can we make another high yet here? We'll see. We have some coil patterns forming on the intraday time frames that I'll show you in just a bit. The largest pullback in the uptrend from the October lows has only been about 128, 130 points. So we need a pullback larger than that to break the uptrend symmetry. But again, your first support is that 20-day moving average. Here, a couple other things you can monitor as triggers would be a break of these RSI trend lines. Those tend to be quite reliable. You can see the MACD has been lagging or diverging here for quite a while. You have some divergence on the stochastics. And the stochastic 60 has been embedded above 80 for quite a long time. And I'll show you a little bit more about that on the next chart. Oh, actually, before we get to that, here is the KISS daily trend system. So for the S&P, no changes. The smart trailing stop remains at 49.51. The system went long back on October 31st, so it's done a great job about catching this uptrend. If we get another push up here, we're likely to see this trailing stop jump up maybe 50 to 100 points. Hopefully we see that happen. I'd like to see that stop tighten up, but regardless, it's wildly profitable from that entry. Next, image number 10. Here's another version of that daily KISS system. This is the one actually that is on the KISS tables, the standard ones. Okay. This one has a bit of a tighter stop. You can see approximately 50 points higher near the 5,000 area. And you can see where the system went long on the same date back on October 31st. It got out there in basically the beginning of January, and then it went long about a day later, went right back long. Okay, and it's got a tighter stop. Now, which version KISS system of the S&P 500 has better stats? This one or the one above? The one above has better stats than this one. But then doesn't mean every trade is going to be better. This one has a tighter stop in case you wanted a tighter stop. So I wanted to make sure you had both here. Next, image number 11. Here's the 4 time frames. Again, we're above the ATR and all the upper time frames. That's your major long-term support. Remember, I've been discussing over the last couple weeks, these lower time frames have been ping-ponging almost perfectly between the cycle indicator, the cycle support, resistance. We had cycle support last Friday where we bounced right off of again. So we haven't broken through one of these major cycles, which I think will be important. So we'll continue to track that, and I'll let you know when we see a break of that. Next, image number 12. Here's another daily view of the S&P. This one got out of order, but this one, and I haven't posted this for a while, this focuses on the 60 length stochastic, which you see right here. Now, again, if you're new to Breakpoint trades, stochastic, most of you are used to the standard default settings of the stochastic, which is typically 14.3 or 10.3, whatever. But a 60 stochastic is literally about 5 times longer. And so what it will do is it'll trend for long periods of time. And what I've noticed over the years is when you're uptrending strongly, it'll stay embedded over 80%. Like you see here, it's been embedded over 80% since mid-November. But why is that important? Because when you have such a condition, you can use short-term oscillators such as say a 2-length RSI. That's kind of like the Larry Connors mean reversion system. You can use a fast Williams percent oscillator, like a 5-length, a 4 stochastic. And whenever one of these get oversold, as long as the 60 stochastic is above 80%, that gives you a objective mean reversion buy signal. And you can see all these that would have triggered since basically early December. You've had 3, 4, 5, 6, 7, 8, 9 of these, and they've all been winning trades. Okay. Now, what would your stop out be? Your stop out would be, because this condition will eventually end. Trends eventually end, obviously. So your condition will be, if you were to take a long and this 60 stochastic then falls below 80, that's your stop out. Okay. But otherwise, this can give you some nice trades, nice mean reversion trades whenever the 60 stochastic is embedded over the 80%. Okay. Remember, as a member of Breakpoint Trades, if you're using our website instead of the YouTube video, we give you the live chart URL, so you don't have to recreate this chart on your own. You can simply click View Live Chart from our newsletter, save it into your browser, bookmark it, or save it to Stock Charts if you have an account, and you can check it anytime you want. But you can see last Friday, these oscillators a couple of these got oversold, the 2 RSI and the 4 fast stochastic. So that would have triggered a little long on Friday, which today has been profitable. Next. Moving on to the smaller time frames, here's the half-day chart. Again, just keeping it simple here. You got a clean uptrend channel, right? That's your support. Remember I said how the S&P appears to be coiling intraday. You can see if you draw a little trend line, down trend line inside the coil, you have kind of inside the channel, you have kind of a coil forming, right? Another thing you could watch is this RSI trend line. If that were to be breached to the downside, that could be a short, which would likely coincide with the break of this channel. So again, we haven't broken support. We're still uptrending, but now we'll see if we can get one more pop up in this channel or not, or if we break down first. There's a demand zone right in here in the green box area. Next, chart 14, here's a 2-hour view. Instead of having the channel here, I'm just showing this potential coil it's setting up. See? Moving average ribbons pinching a bit. Chart 15, here's a 60-minute chart. So like a fractal moving down to lower time frames. Again, you can see the channel. You can see the coil inside the channel. Okay. So we stalled at the top of the channel today, logical, pulling back. Now we'll see if we can hold this coil and break out one more time, or we break down. But a break point's coming here. On a breakdown of the coil, you have a couple open gaps down here that could be magnets. Next. Chart 16, here's a 30-minute chart, just shows you that coil a little more clearly. So we're pulling back. The bullish view would have this being a A, B, C, D, actually A, B, C. This would be coming down in an E, and you'd go up again. So we'll see if that ends up playing out, but you can clearly see the coil forming. Next, moving on to the triple Qs. Here's the triple Qs. Now the Qs look a little bit more vulnerable, and they did get slightly below their 20-day moving average on Friday, recovered it today. But notice you have a wedge pattern here, and we back tested the broken wedge trend line. So that is technically resistance here, right? Now, to have a symmetry break, a bearish break in the uptrend, you need to pull back larger than about 17.6 points. So far, the pullback off the highs at Friday's lows was about 16 points. So we haven't broken symmetry yet. We're back testing the trend line of this wedge-like pattern, so that is a resistance. So the onus is on the bulls there a bit, unless we can recover back into here. The moving average ribbon is pinching here. Chart 18, here's the weekly view of the Qs. Again, still waiting for this wave 5 of 3 to confirm an end. Once it does, I'm looking for this deeper wave 4 correction. Again, this is the same chart I had, back in August when I was showing this. And this has been a pretty good wave count, but I'm watching for this wave 3 of 5 for some completion. It may have completed or it may not have. But once it's confirmed. I'm looking for this deeper wave 4. Number 19, here's the triple Qs KISS system for the daily. Again, smart trailing stop remains at 427.70 roughly. So it's pretty nicely protected here, a little tighter than on the S&P. Nice entry back here on October 31st, just, about 3 days off the lows. Number 20, here's the 4 time frames. Interesting, on the daily, we got a little bicycle showing up there. You see that? We're above the ATR still. We're below the ATR on the half day. And just like on the S&P, price is following these cycles very well. So going to be interesting to see when it finally breaks through this one of these cycles. That'll be important. Number 21, here's the half day chart. No changes here. Number 22, here's a 60-minute chart. Remember this wedge? Again, he talked about the wedge on the daily above. See how we broke the wedge and back tested it today, finding resistance there. Number 23, here's another 60-minute chart. Last week I was showing a diamond, bearish diamond, which played out on Friday. Now we recovered over this channel here today. We'll see if that can hold as a support or not. Number 24, there's a 30-minute chart showing the same thing. This broken trend line is a potential support now. We'll see. Let's look at some of these large cap tech stocks that have been dominating the market. Here's NVIDIA. Again, NVIDIA spiked up to that 574 high. If that's the wave 5 or not remains to be seen. My problem is it didn't hit that 1,000 area. I really wanted to see it hit the 1,000 round number. But so far, price is consolidated in here. A break of this 9 EMA on a closing basis, we're almost for sure will tag the 20-day. So we'll see. Does it NVIDIA rally one more time and get that 1,000 area, or do we have a little short-term high here? This was the largest pullback in the uptrend, about 132 points. Number 26, here's the two-hour view. You can see this sideways pattern is forming. We'll see which way this breaks. Number 27, Meta, still holding up here. No changes in the pattern. Number 28, Google, gapped up today. Nice mean reversion long off that 200-day moving average. You can see your long trigger there. So congrats if you took that. Number 29, Amazon, still holding its pattern as well. You can see how a coil could form here on a breakout. Let's take a look at Tesla. Tesla doesn't dominate the indexes like it used to, but Tesla, it's had a heck of a haircut since the July highs of last year. Basically about a 50% haircut. Last Friday, it came down to this top of this demand zone, a little doji. So it's bouncing off of the area from a divergence on the RSI and the MACD. Today, closing right around that 9 EMA. Number 31, here's a 2-hour view. Again, you had some MACD divergence here. So we'll see if we get some follow through tomorrow or not on this. Number 32, here's IWM small caps. Remember, IWM was into the supply zone where it's been pulling back the last couple weeks. Number 33, here's the daily. IWM was down today, even in the morning when the index is gapped. So here, we're between the 20 and 50-day moving averages. To me, likely to see at least a tag of this 50-day. Got a pretty good MACD divergence at those highs. Number 34, here's a 2-hour review. We broke that pattern we were showing last week to the downside. And chart 35, here's a 30-minute view. You can see we're net downtrending within this channel. Still looks quite weak. All right, let's move on. Again, with the market, like I said, getting very tired, getting very stretched, we still got to keep an eye on these inverse ETFs. They haven't broken out of their patterns yet. Here's SPXU. That's a triple inverse ETF for the S&P. Still in the pattern, still diverging, but we want to keep an eye on this, obviously. Chart 37, here's the 2-hour review. Has this wedge-like pattern. So far, we got a little higher low here, but not sure if it's complete or not. If you did take a position, just put a stop in place. Maybe even a tight stop around that 684 area. Chart 38, SQQ. That's the triple inverse ETF for the Qs. Getting stalled at that trend line on Friday, pulling back, but we're still monitoring this little wedge pattern that is forming. Jabber 39, here's the 2-hour view. Kind of a rounded bottom here. Got a couple higher lows. You could attempt a long here with a stop right at that 1077 higher low. Notice the open gap up there in the boxed area. And the other one, FNGD, that's the inverse ETF for the FANG stocks. Still in this pattern, but it's got a nice base that's formed. Again, it needs to clear this 409, 410 area. Stalled there last week again. But it, unlike the others that are still downtrending, this has more of a base building. So it looks quite interesting to me. Definitely one to watch, guys. All right, moving on. Let's look at a couple indicators. Here's the VIX. Nothing new on the VIX, basically in the middle here. You can see all the VIX Bollinger Band buy signals that generated since December. They all played out nicely. Number 42, here's the VVIX. That's the volatility of the VIX. So now this one's different than the VIX. It closed outside its upper Bollinger Bands on Friday and then back inside today. Technically, that is a VIX Bollinger Band or VVIX Bollinger Band buy signal. So I went ahead and marked that. You can see the last one you got was back here in mid-February. That obviously played out. You had a little short here in January, just worked out a couple days only, and you didn't get out. But no, we'll see. So interesting little signal there. Jabber 43, here's one I'm going to keep an eye on, the NYSI 9 EMA crossover system. It went long back here in early November, so it's done a very good job. It never confirmed a sell signal on this first break, but you have a big divergence here that's been forming, as I've been discussing. So what I'm watching here is when this finally breaks through the 9 EMA, this might be a pretty good signal. Hasn't broken yet, but we're watching it. Moving on to some of these sectors, here's XLK Technology. Again, similar look to the Qs, back testing that trend line today, right around the 20-day moving average. Jabber 45, XLC, communications sector, still holding up very well, contains a lot of those FANG stocks. Jabber 46, semiconductors, they've been weak, coming down for the last week or so. Now we'll see if they bounce this uptrend line, otherwise the 50-day moving average could be a target. Jabber 47, financials, they've been super strong. They were down a couple days last Thursday and Friday, but rebounding today again. Still super strong uptrend there. One area that's been weakening or sector is the transports. Pulling back here, you can see the 9 crossing below the 20. The 50-day moving average looks like the first target there, which we're getting close to. Jabber 49, industrials, still holding up very well here for now. Same for materials. That contains some of those commodities, so this has been on fire. This area looks good. One area it's coming down is the healthcare, XLV. You had such a steep wedge here. Finally broke that last week. To me, it looks like it's at least wants to tag its 50-day moving average there. Now today, the energy market was strong. Here's XLE, up about 0.35%. Around these previous highs, it's been a heck of a run from that trend line break. Getting a bit extended short term, you can see the RSIs. Here's the oil services. Had a nice move. They're not back at the highs like XLE Energy though. Jabber 54, ExxonMobil. This continues to just truck along. We bought it back here in January off these doji candles. It's been a nice move, and since that time we had a dividend that was generated in February. Next one isn't for a couple months though. Remember, this is quarterly. Jabber 55, Valero, another energy stock, just continues to rock and roll. You had kind of a cup and handle here. Just continues to play out. But, you know, RSI, even the 14 RSI is almost at 82%. The 5 RSI is at 96.5%. So it's quite extended. Not chase it now. But there's no divergence here. Look at the MACD, no MACD divergence. So to me, that tells me on the next pullback, it's likely to form a higher low. Next, moving to commodities, here's DBC, up 0.9% today. Longer term, it's forming a big coil. Jabber 57, here's the daily version of DBA, moving up nicely. Jabber 58, crude oil, up 2% this week. This is the weekly chart showing us the 200-week moving average has been important support over the last year, as you can see. Jabber 59, here's the daily. Steve has a wedge pattern here. Not sure about this yet. It could obviously blow this wedge through. Slight break of it today, but I'll leave it here for now. Again, it's been a nice move up. Jabber 60, natural gas, up 2.9% this week, so bouncing back a little bit. Jabber 61, here's the daily. Again, still, we'll see if it can form a higher low in here or not. You can see that little open gap. And Jabber 62, there's one of the tradable ETFs, UNG. Jabber 63, copper, had a big breakout last week from that coil pattern. Little doji so far today, but nice breakout last week. Nice moves in some of the copper stocks like FCX, SCCO. Jabber 64, here's the daily. You can see that nice clean break. Jabber 65, DBA agriculture. This area's been on fire. This cup and handle that I showed in January has played out absolutely beautiful. Congrats to those of you who took that puppy. It was just textbook. Jabber 66, here's the daily. I mean, we showed this little pattern on the daily back in January. You had your long opportunity there. Then you had another high and tight flag that price broke out in March, and it just continues to march higher. Just crazy. And look at this, MACD, no divergence. See that? Next, Jabber 67, here's cocoa. Look at this parabolic move. So, you know, you see what DBA is doing, you see what some of these commodities are doing, you see what coca is doing. That is inflationary, guys. That does not help the Fed. Again, Bitcoin's had a hell of a run, but the move in Bitcoin isn't inflationary like this stuff. Jabber 68, here's uranium ETF. It held, so far it's holding this demand zone. By the way, one of my KISS systems went long. So, you know, I think it's got to stop right at that, around that 2670 area. Longer term, as you know, I've liked uranium for the last several years. Next, Jabber 69, here's the 10-year treasury yield. It's had a nice move over the last week. Basically, so I'm wondering kind of now if this pattern is like, was an ABC of A, that was a B pullback, and we're getting to move up in C. We'll see where this goes. Jabber 70, here's TLT 20-year bonds. Again, they're continuing to respect their downtrend channel, pulling back from that downtrend line last week. Jabber 71, here's high yield corporate bonds. Small break out of that little coil, back test, bounced off of it for now. Moving to crypto, here's Bitcoin. Again, Bitcoin finally pulled back, but so far has regained that 20-day moving average. Again, it's been a hell of a move on Bitcoin. Here's the weekly view of Bitcoin. We're looking at this as a wave 3 right now. Once this completes, we're looking for a wave 4 correction. But that wave 4 correction should be a buying opportunity. Then I think the next push, maybe wave 5, could take it up to, who knows, 100,000. Jabber 74, Ethereum, also coming down. Now this is well below its 20-day moving average. Again, they had a hell of a run, but coming back to earth a bit. Jabber 875, here's MSTR. That's been the star, but finally, big sell-off today. Down 280 points, slicing slightly below its 9 EMA. Again, look how wide the MA ribbon was. You know, just a month, less than a month and a half ago, is $530. That was our long trigger. So one hell of a move. Now MSTR, they buy Bitcoin, so it essentially moves very well with Bitcoin. It's like a proxy of Bitcoin. The crypto stocks that haven't done very well are the ones that mine Bitcoin, like Mara. You can see it's been declining for 3 weeks, unlike MSTR and Bitcoin, which were going straight up. Anyway, moving on, Jabber 77 US dollar bouncing back today. Now we'll see what it does with this downtrend line, see if that causes a little pullback in gold or not. Jabber 78, here's gold on the weekly. I have a coil setting up here, perhaps. Jabber 79, here's the Japanese yen. I haven't shown this a while. You basically have about a 1.5 year descending triangle that's forming here. Again, this could go either way. It could break down or it could break to the upside. Moving to the precious metals, here's gold. Again, gold, as you know, had that perfect ABCDE coil pattern, busted out of that. It's pulled back after getting to 2200. But for now, that pullback looks more like a flag right at the 9 EMA. Volume patterns are good, no MACD divergence. So maybe this bounces off here and makes another high. If it doesn't hold the 9, then I'm looking for a pullback to the 20-day moving average. Otherwise, this could be a wave 1, nested 1, 2, 1, 2 count perhaps. Driver 81, here's the weekly version of gold. Again, nice breakout. I do ultimately also want to see this GDX-GLE ratio break out of this channel over time. Driver 82, here's the bigger picture view of gold. This is that monthly view. So under the very bullish view, we're in a wave 3, perhaps. That wave 3 maybe takes us up to 2,500, then pull back, then you go up again, maybe to 3,000. I've always said I think gold and silver will have their day like Bitcoin, and I think that has started. Driver 83, here's silver, finally pulling back a little bit. It's still in the bigger pattern, obviously, hasn't broken out, but it's nice, moved up nicely over the last few weeks. Driver 84, there's the weekly. You can see this pattern a little more clearly. It's been forming for about a year and a half. And my favorite chart is this monthly chart of silver, this big old monthly 4-year coil. When this puppy breaks out, guys, I think we could see silver going back to 50. Okay. Next, moving on to the stocks, here's GDX weekly. Again, rallied off the lower portion of the coil a few weeks back. It's still in the pattern, but you can see how much the stocks have lagged relative to gold. While gold is at new highs, GDX is nowhere close. Driver 87, here's the daily chart of GDX. This played out perfectly, rallied off the demand zone. Your buy trigger, if you wanted confirmation, was breaking the channel. You had a channel break on expanding volume. You had a trend line break on the GDX-GLD ratio trend line. You had a break on the RSI trend line. Everything set up. Again, your short-term support is the 9 EMA. Kind of like gold, we either rally off the 9 EMA here again, like a flag, or if we break it, then I think we come down to its 200-day moving average and maybe the 20-day. For now, the 9 EMA is your support. Driver 88, here's the BPGDM. Again, fantastic buy off that Rincos signal from early March or late April, I guess that was. Awesome signal. You can see how very clean and good these signals have been. Not perfect, get some whipsaws once in a while, but otherwise pretty damn good. I'm using a 1 box size, which means each box is 1%. Remember, BPGDM charts go from 0 to 100%. Excellent chart. Some of the stocks we'd put out were AU, Anglo Gold back in February, moved up to the supply zone. Hope you took some profits there, finally pulling back now. Driver 90, EXK, silver stock. Again, your trigger was back basically the first day of March, breaking that trend line. And on the ratio, really nice move, percentage-wise. Driver 91, BVN was another one that I put out, and it's had a nice move. This one's had the strongest relative strength. You can see it was rallying last year and in December, unlike the other precious metal stocks. Finally, following up on other stocks, here's CCJ. This is uranium stock. One of our astute members put this out last week as a low-risk play off the 200-day moving average. I went long with them, and it was a nice trade there because you could have had a stop. Tight stop just below the 200-day moving average. So it's been a nice trade there. Driver 93, here's Zim. This is a short idea of mine from a couple weeks ago. Continues to work out. There's an open gap down there that would be the target on the next pullback. Driver 94, TNDM. Here's a couple long ideas. This is from one of our subscribers I saw in the trading community. We'll see if we can clear that area out just over that trend line. Driver 95, OGI. Here's one that broke out today, low-priced one, but maybe if you get a move up over today's highs, maybe you can get some momentum. Driver 96, Swim. Lower price stock again. You got a resistance right here. Clear of this, your target would be up in this supply zone. Driver 97, BRCC. Basically a bull flag here trying to break out. Volume's nice. This is one to watch as well. And chart number 98, YPF, breaking out of some resistance today. Good volume. Maybe one to watch for some Momo if the market's holding up. Okay. Again, not a lot of great longs setting up, guys, for my scanner. So, it's slim pickings out there. Don't force trades, obviously. And of course, remember to keep an eye on those inverse ETFs. All right, guys, that'll do it. Have a wonderful rest of your evening. Thanks for your support of Breakpoint Trades. And if you're thinking about becoming a subscriber and you want some help, write into support. I can give you a personal walkthrough, do a private Zoom, answer questions, show you the KISS systems, whatever you want. All right, have a great evening. Take care.